and welcome to Sobel Insights. Sobel Insights is a weekly series where we provide some brief information on various topics. Our goal is to keep these sessions to 15 minutes. At this time, we do not offer CPE. If you have any ideas for topics or presenters, please feel free to reach out to me. Our topic today is the commercial auto insurance market. Our presenter is Ray Gil, Senior Vice President at USI Insurance Services. Ray, now, I've had my insurance policy, the same company, for over 30 years now, and I probably rarely review that policy. And I can imagine business owners that are so tied up with stuff, running their business on a day-to-day basis with what's going on with the pandemic and everything. It's very difficult for them to keep up on top of this stuff. And what has made the commercial insurance market the way it is today? I mean, it's evolved, but what's made it the way it is today?
Sure. Thanks, Brad. I appreciate it. Great question. The commercial insurance market is really evolved / deteriorated significantly in the last 8 to 18 months because of a variety of factors. And when I say deteriorated, I mean for the buyer. Rates have gone through the roof. Capacity to provide that insurance has reduced. But to answer your question, let's talk a little bit about why, right? So what's happened in the last few months, year and a half, is that the insurance market has been involved with what they call kind of nuclear verdicts. Nuclear verdicts are liability claims that are above and beyond the scope that the insurance underwriters and their actuaries had planned for. Okay, meaning the insurance community works on historical numbers and historical, guesswork for rates, right? So when claims, both in volume, which we call frequency, many of them, as well as the amount of these claims goes beyond their rating structure, they implode. They panic, their reinsurance deteriorates, costs them more money, their reserves go up, they have to allocate more assets from the firms to these future claims. So the litigation and liability trends for bus accidents, commercial vehicle trucking accidents, construction vehicle rollovers, those liability losses over the last few years have mounted up to the point where the underwriters are starting to react / overreact about what they're doing. And how do they react and overreact? How they react is they become more selective with who they are going to insure. Okay, they start taking their portfolio and they narrow it down to only the best in class, and they start demanding more and more of their insureds as far as investments, participations, et cetera, et cetera. So I'll revisit that concept a little bit as well, but talk a little bit more about the market. A lot of what's going on with why these claims are becoming more frequent and larger in size is because of the conditions on the road. We've all driven around during the week and on the weekends. The number of trucks that are on the road distributing home goods, distributing construction materials, distributing rocks and gravel, and driving at, no disrespect to drivers, driving at rates that are in par with someone doing 75 and 80 miles an hour in a small car. This traffic pattern has created some very consistent and substantial accidents involving multiple players, involving multiple passengers, et cetera. The volume of distracted driving. We've all, right? Everyone has one of these or two of these or three of these. They're mounted here, they're mounted there. The volume of distracted drivers of late has gone through the roof. Am I thinking about COVID? Am I thinking about my work situation? Am I working while I'm driving? What is the situation that is distracting me? Kids in the car, I'm doing 4 things at once, I'm streaming my music. So the distracted driving, the volume of road activity, the increase in commercial traffic, and even in some cases, the condition of roads and infrastructure, right? We're seeing infrastructure construction, detours, flags, limited speed. So there's a lot going on that has deteriorated the market conditions for a commercial business operator. It is more for those, the pain and suffering is more for those who operate commercial vehicles, box trucks, tractor trailers, deliveries. But unfortunately, because we all buy insurance from the same pool, it also affects the firms that do financial services, that do distribution, that just have salespeople or technicians in the field driving in their, Honda Accords and, mid-size SUVs. The rates, the selectivity, and the minimum capacity has also affected those people as well. So the business owner who says, well, I only have 42, whatever they are, RAV4 Toyotas for my sales force, they have felt the pain. They are being pressed on both pricing and they're being pressed on how they're participating related to the insurance experience. It's become a line item and a budget buster for business owners, small and large, up there with workers' compensation insurance and their employee benefits buy. The employee benefits buy benefits, medical insurance, dental insurance for the staff, for themselves, very expensive over the last few years, as has become workers' compensation, just because it's a big buy, as well as their auto, whether they have a couple of vehicles or a lot. It's become difficult. So that's kind of why we're in the situation we're in.
That's amazing. I mean, I've sat here in my little bubble. I've gone to the office at times, gone to clients, and sat here in my little bubble, thinking not as many people on the road during the pandemic. You see the roads empty. And you're thinking insurance is coming down like this, and what you're hearing. And I didn't think, oh my gosh, only Amazon trucks on the road. Everybody else. So I didn't think it was as bad as it's gotten. Where do you see it going in the next few years?
Yeah, I think, but that's a good point. There has been a downturn for a little while, right? 6-8 months, we all enjoyed that commute or that Saturday drive. So it has come down, but it's in the big picture, it's just hyperboil right now. Where I see it going in the future is, I think the buyer is going to have to reset their anticipated spend as it relates to auto insurance. And I think the buyer is going to have to reallocate an investment in some of the things that I can talk about that will help them manage their costs and manage their options going forward. So it's going to be a little bit of a reselection, much like what happened to the employee benefits world. 10 years ago, you could get your employee benefits, low deductibles, low co-pays, 2 or 3 quotes. It was never a picnic, but you always did okay. Well, now we reset that buyers are taking larger deductibles, they're self-insuring more. So I believe there's going to be a buyer reset, like there isn't anything these days, right, in the business world, of what has become a little bit normal or expected. I think that's where we're headed.
It's interesting because, your business is very much personal oriented and interacting with your clients and stuff, and you hate to see them commoditizing, which insurance has been commoditized to some extent. But when the clients, when they're, for their upcoming renewals, I mean, should they be addressing this immediately, like for next year's renewals, or should we be thinking 4 or 5 years out?
Right, no question, great call. One of the things that their broker, USI, whoever it is, has to do is get in front of this. And they have to get in front of it by, the brokers should be communicating openly the market expectation. Getting together in advance of planning the business budget, getting together in advance of renewals, and setting the bar. This is where we think we're going to be. So that's number one, is it not being it not being a surprise. Business managers, business owners, we've all learned to deal with a lot. What we don't like is dealing with surprises, and we tend not to deal with them well. So over communicate and understand what's expected. Okay, number one. Number two is you have to, both you as the owner and the agent broker, have to communicate your story proactively to the underwriting community if you have a good story. What does that mean? The underwriters want to know about your driver selection. Okay.
Mm.
Who are you using for your drivers? Because part of the problem on the road now is not only are there more commercial vehicles on the road, but the people driving them are junior drivers. They
Right.
don't have 15 years experience. You can't go buy any truck or any commercial vehicle and not see hiring drivers, bonus paid, right? We are thinking about becoming a driver now, right? It becomes so constant, these signages. So they want to know, how are you selecting your drivers? What are your driving parameters? How do you monitor their driving experience? How are they trained? What's your pre-driving safety protocol, safety trikes, brakes, visual lights? They want to know, if you have a good story, you have to select and tell that story to make you best in class. You have to separate yourself from the herd, because the underwriters need to know that you are proactively using telematics. Telematics in commercial vehicles are electronic cameras and global positioning systems that tell you where you are at any given time, tell you how fast you're going at any given time, as well as often come on and record 30 seconds before and 30 seconds after a violent movement of a vehicle. A violent movement can be a sudden slowdown, a sudden acceleration, a sudden change of lanes, okay? And what the underwriters want is, it's video. In the event of a claim, video saves money. Video tells exactly what happened. Often police reports aren't as accurate as they could be. Often someone's statement under duress is not as accurate, as precise as it could be. When you have video, and that video shows that someone drove in front of you, that helps your liability loss, that helps your claim payment, et cetera. So these are all pieces that the underwriters want you to have. You have to invest in them. And if you have to tell that story. You have to be proactive and say, no, I'm different. Here's where we train. Here's how we monitor. Here's how we do maintenance. And here's how we, require annual reviews of license and histories and things of that nature. So that's a mechanism.
It's amazing. I know that you have lived this particular phrase I'm going to get to in a second. You have lived it your whole life because it's been your industry. But the phrase du jour that I thought of recently, that I hear everybody saying, every industry saying, and your industry's been saying it for a very long time, is risk management.
Right.
And you, as I say, your industry's been saying, but now every industry that you talk to, manage your risk. Get the cameras, know your drivers, and document it. In the past, it was never that way. Now it's that way. So I know with health insurance, you used to go out and you used to buy, the brokers would shop the plan to different carriers. Is that what USI or other brokers should be doing now, is shopping the plan to different carriers, or is it a different way to manage the?
No, it's a great question. It's not, I wouldn't use the word shop. What we do and what makes sense for other agents or brokers is to selectively manage the market. You cannot take, in this marketplace, I talked a little earlier about the available underwriting community becoming reduced. Carriers are getting out of offering commercial auto insurance. They're done doing it. So the marketplace, the number of players is restricting. As a result, you should not go out every year and go to the 6 carriers and say, here's my submission, what can you do for me? You get market fatigue when you or your broker does that. So you have to selectively manage. I'm going to go to these 2 or 3 markets and I'm going to work with them for 5 years. I'm just using an example. I'm going to establish a relationship. I want them to know who I am. I've done the review, so I'm getting my best rate, okay? But I want to build up a little bit of a bank account of good claim experience with them for 3 or 5 years, so that if I do have a claim, when I do cut someone off, when I do have a loss or I tap someone going slowly, the underwriter doesn't immediately need a 15 to 30% rate increase because I don't have any money in the bank with them. You have to establish a little bit of an insulator so that you can withstand some friction. You can withstand some good year, bad year with the same underwriter. Because what happens is when you go to the market constantly, You, as I said, you get market fatigue. And 1 year in, 1 year out, the underwriter is going to pay a claim. It's going to happen in that first year. They're either going to non-renew you because they charged, I'm just using a number, 150, and you just had a $300,000 claim, one claim for $300,000. They're either going to non-renew you, or they're going to require so much rate for you to renew. You then go into the market as a needy buyer. You're stressed. You are not the, you go into the market and look for alternative selections when you are ready and when it makes sense to do so.
Right.
So I don't like the word shop. I like the word selective market management, because it takes a while for you to establish that bubble.
And that's great, because what you're also saying is you're creating the relationships that help you keep rates where you hope they should be, rather than going out and commoditizing, saying, looking for the lowest bidder.
Right.
Because that, as you said, you use the great word market fatigue. I was just going to say that runs out after a while. They know that, right. Oh boy, Ray's calling, and you don't want to have that reputation throughout the industry. Ray's calling, we know what his phrase is going to be. Whereas you've created the relationships with the carriers, and you're working with them in the best capacity possible.
Right.
So
another angle, I'm sorry, but another angle would be package your commercial risk. Package it so that the underwriter is getting a look at both maybe the unfavorable, but he's also getting the warehouse, the property insurance that may be more favorable to him, the liability line that may be more favorable to him. So, package it so that the underwriter, because the underwriters look at the entire account, as everyone should, and you can kind of offset maybe a rough auto experience with a good property policy or a general liability or an umbrella. Here's a little cream, but I need you to swallow the bitter pill along with it. So that's another angle. And that's all part of just strategy. Manage what you have, not just, pinata. I use the pinata. You just go find something to hit and hope some candy comes out of it in the form of a favorable quote.
No, great. I appreciate that. We're just about over. Thank you for the information. As I tell all the listeners, you can always call me up and ask the questions, and I'm going to direct you to Ray, and the professionals in whatever area we're talking about. And so I recommend you talk to Ray. I want to thank everybody for coming and listening in. I mean, I know that I have a truck driver as a client, a commercial, obviously commercial. We have other fleet carriers, so they need to be looking into this more. So Ray, thank you very much for the information too. And I look forward to talking to you and having the viewers see some more presentations from you in the future. Thank you.
That would be great. We look forward to helping any of your customers out, and thank you for the opportunity, Brad. It's lovely. Thanks. Be well.
Okay.